explain about Ajinomoto Malaysia Berhad. We choose this company because it is the first Japanese company that established in Malaysia in food industry. Seasoning, cooking oil, frozen meals, sweetener and amino acids all are produced by Ajinomoto company, which is a Japanese food and biotechnology company. Ajinomoto Malaysia Berhad incorporated in 1961. Since then, the company has established itself as a dynamic food spice provider that Malaysians have trust for decades. The company has 10 branches in Malaysia, among them are in Kedah, Pahang, Perak, Johor and Sarawak.
I will explaining the trend analysis and comparison in terms of liquidity ratio between Ajinomoto and Nestle company. Ajinomoto show an uptrend movement from 2017 until 2019 for both quick ratio and current ratio. Meanwhile, Nestle company had fluctuated throughout the 3 years. However, Ajinomoto still managed to be better than Nestle in both quick ratio and current ratio. This indicates that Nestle had better skills in meeting their obligation without having to rely on other liquid assets such as inventory. Moreover, Ajinomoto companies had an upward trend for net working capital, yet Ajinomoto were the better company than Nestle. This explains that Ajinomoto has created additional funds than Nestle and they could use it to invest in other activities. Meanwhile, Nestle company had indicates negative statistics throughout the 3 years due to incur a large cash outlay. Overall, Ajinomoto has a better performance than Nestle in liquidity ratio.
So I will continue with the asset management ratio, which is the first one is average collection period. So in this slide, I will interpret the graph. So as for this case, it means in 2017, Nestle company are better than Ajinomoto since their average collection period are smaller than Ajinomoto. But in 2018, the graph shows that Ajinomoto outperformed Nestle company, and in 2019, Ajinomoto also take the lead as their ACP average collection period are much better than the Nestle company. The second one is inventory turnover. Nestle company outperform other company, which is Ajinomoto, since the greater the company's inventory turnover ratio, the better its performance. The graph shows that the inventory turnover ratios for Nestle companies are higher than Ajinomoto for each year, which is in 2017, in 2018 and 2019. Next is fixed asset turnover ratio. Ajinomoto company shows a greater fixed asset turnover ratio than Nestle company. That means the company of Ajinomoto is able to utilize its fixed assets and is effective at asset management. It is because the higher fixed asset turnover ratio indicates that a company has effectively used investment in fixed assets to generate sales. And the last one is total asset turnover. Nestle company indicates the good performance of total asset turnover ratio better than Ajinomoto company. For the 3 years straight, Nestle company leading the way by having the higher total asset turnover ratio. Nestle company performs much better than Ajinomoto company. Nestle company also a strong company since it suggests that the firm will be able to utilize its whole assets and will be effective at asset management.
So I will explain about debt management ratio. For the debt ratio analysis, Ajinomoto company indicates the good performance of debt ratio better than Nestle company. This state that Ajinomoto company is much better in debt ratio because Nestle company has the highest debt ratio than Ajinomoto company. In this problem, we state that Ajinomoto company is in a good performance and not heavily relying on debt financing. Next, for debt to equity ratio, for 3 years direct, the debt to equity ratio for Ajinomoto company is less than 1, indicates that more funds provided by the owner compared to creditors. It shows that Ajinomoto company is performed well in 3 years because it less than 1. This indicates that Ajinomoto get the better performance. The Nestle company as a low risk company will indicate the better investment, and a highly leveraged company will indicate the risky investment. Besides, for time interest earn ratio, in this situation we realize that the higher ratio of time interest earn, it indicates the company has higher ability to pay the interest from their opportunity income. So basically, Ajinomoto Berhad in 2018 has the higher ability than Nestle company, which is to pay the interest from their opportunity income, compared in 2017, and the ratio in 2019 is decreased. So that we think that 2018 has the best condition for time interest earned for Ajinomoto Berhad.
Now, I will explain the profitability ratio for Ajinomoto versus Nestle. For gross profit margin, we can see that even though the performance of Nestle shows an increasing and decreasing trend within 3 years, it is still higher than the performance of Ajinomoto company. This indicates that Ajinomoto is less profitable than Nestle company. In terms of operating profit margin, Ajinomoto outperformed Nestle in 2017. For the year 2018 and 2019, Ajinomoto get less profit than Nestle company. This shows that the lower ratios may be due to the less productive nature of asset in providing returns to both creditor and stockholder. Even though Ajinomoto shows a declining trend in net profit margin, it is slightly higher than Nestle company. So we assume that Ajinomoto is making a higher profit with lower operating expenses. Ajinomoto records the highest return on asset in 2017, but in 2018 and 2019, Ajinomoto get lower returns than Nestle, as Ajinomoto is not performing well in terms of its ability to efficiently use its asset. As for return on equity, Nestle stockholders are enjoying better return on their investment than the stockholder of Ajinomoto company. So, they must take into consideration how much of the firm is financed using debt and how much of the firm is financed using equity. We assume that Ajinomoto is not generating a higher return for the stockholder of the company. In conclusion, Ajinomoto get lower profitability than Nestle due to low sales volume and high cost of goods sold.
Next, we will see the last ratio, which is a market ratio. Under the market ratio, we will analyze the earning per share for both companies. As we can see, the earning per share of the Nestle company is slightly higher than Ajinomoto company throughout 2018 until 2019. Higher profit of earning per share indicates that the company is able to make profit for its outstanding common share. For the conclusion, we can assume that Ajinomoto company is better than Nestle, but at the same time, we cannot deny that Nestle were high liquidities is more superior than the Ajinomoto company.